And speaking of Netflix, once again, it hit a 52-week high today, trading at levels not seen since January of 2022. And our next guest says it will head even higher. Joining us now is UBS analyst John Hodulik. John, why do you think it's going to head higher? And I ask that knowing that there's really three main things I think we're looking at for Netflix tomorrow: paid sharing, ad tier, and strike impacts.
Right. That's exactly right. And I think all those are moving in the right direction. And as a result, the financials are moving in the right direction. I mean, I think, obviously with Netflix, the guide is an important part, at least in terms of the short-term movement. And they're not going to give subscriber guidance, but I think their underlying guidance that they do provide for next quarter will show a meaningful acceleration in the not just the sort of metrics, but in the financial health of this company. And we should see some dramatic acceleration as a result of those initiatives that you're talking about over the next couple of quarters.
A year plus ago, we were talking about international expansion and the maturing of the business there being the most important thing for Netflix. Is that no longer a big deal?
No, that's still a big deal. I mean, I would say in general, the growth has been, we got to remember only about a third of the subs are in the United States, 2/3 are outside, but a lot of those markets are still massively underpenetrated. So the company has been shifting its content budget from U.S. language or English language and U.S. content to more local language, which I think is very different than what's going on competitively from the rest of the streamers, who I think are in the process of pulling back. And I think that should drive growth. But the real growth drivers, as we already mentioned, is really the ad tier and then the fixed to password sharing. Both of those, I think we should get some more color from the company this quarter, and I think you'll see that really kick in the second half.
Is Netflix in a good position to withstand what could be prolonged strikes from writers and actors versus its media peers?
Yeah, we think so. And again, part of the fact is they do so much content production outside the U.S. that's not impacted by the strike. And as a result, they have a tremendous amount of growth outside the U.S., definitely in contrast to a lot of their competitors. But also, they have a lot of content that's sort of already done. And they're also licensing a lot of third-party content that goes on their platform and actually does very well from a rating standpoint. And again, as the other sort of large media companies with streaming businesses retrench on the streaming side, you're going to see them step into that licensing market even more, which is also good for Netflix and gives them more content along the way.
Very quickly, John, AT&T and Verizon, we just got that statement from AT&T earlier in the hour, the impact from these lead cables and what it's done to the stock.
Oh, it's crushed the stocks. ATT, Verizon, even the towers, which we cover and are constructive on. And we think it's overblown. These companies, starting with AT&T and Verizon, have not deployed infrastructure with lead in it since the 50s. It's a low single-digit percentage of their overall infrastructure. The testing that they have done in the past has not shown any contamination, nor have they had any issues with personnel. So we think it's overblown, and the massive moves in these stocks are overblown.